everyone, this is Mike Hamilton for Trade the Easy Way on Saturday afternoon UK time. I do hope you are having a great weekend, making the most of the summer weather. Djokovic has just been knocked out of Wimbledon, so there's plenty of great football on, with Wales powering through and Djokovic out of it. Can Murray stay in there and go right to the wire? Let's hope so. All right, enough of sport, because you may not be into sport, so let's look at markets instead. And this week we have non-farm payroll. It's that time of the month when we need to think about the dollar, see what the dollar's doing, and then see if the likelihood is that the US recovery is continuing and the likelihood of the next move in US rates is potentially up, or are they going to hang on and still hold off? Massive week in terms of the reaction to the markets and the Brexit, and we'll talk about that in more detail as this unfolds. But let's keep this as short as I possibly can. So I'm looking for further strength in the dollar, but the Aussie, because of the gold, is pushing up. But I think there is sort of a fire line ahead here, and I think it is 77.20 area, which is where we fell from here in March and May. This is the weekly Aussie US dollar. So we've had these 2-3 higher closes on the weekly chart, but it is pretty pathetic really. And so what I'm looking for is a three-way reversal, and I think that's going to come up here. I think the third touch, or the next touch of that trend line, is going to see that potentially come down. I think it could come all the way up to, let's have a look at the daily chart. They see more clearly what I'm looking for on this one, so somewhere around the 75-76 area in Aussie US, unless of course we close above it. So let's go and look at the pound, because that's obviously one of the most important charts out there at the moment. And the pound US dollar has had a pretty awful week really. This is the Brexit Thursday close at 137, and the Brexit close low at 132 area. We spent all of last week trapped in there. We had a little peak underneath it on Monday. They held it up, and they didn't even manage to get back to the Sunday back up to fill the gap. So, yeah, they just narrowly got it above the Sunday open. If you look at this 3-hour chart, there's the Friday close before, on the previous week, on the 24th. That closed at 136.85. The gap down to 135.15. We were just above it on Wednesday, and then kept falling back from it the rest of the week and drifted sideways. So I think we have a Bank of England statement on Tuesday, a stability report. So I'm looking for some sort of recovery. I think this is, the indicators are on the floor. And I think when you consolidate like this, I think there's too many traders short, and we need some uptick to shake some weak hands out and then to get some volume back in this market. If you look at the weekly chart, it is actually something of a hammer-like bar, just drifting miles away from the moving averages. Here's all the moving averages: 20, 50, 100, 200, all up here on the weekly chart, and we're miles away from it. So we need some sort of pushback. And the likely area is of the lows of February, which will put it at 138. 138 on the 3-hour chart is a 50% retracement of from the previous range, not from the Brexit range. This is set from the May and June, sorry, primarily the May range. So in June we got close to the 127 extension, and then after the Brexit vote we got close to, we came down to the 161 and then held the 161 for the rest of the week. So that's why I think the 138 is the previous. So it's not 50%. That's the May support level. So that's what I'm interested in. I like picking levels that I think they're going to go for. So I'm looking for some uptick in the beginning of the week. So you can see we're right in this apex here. Of course the trend is down, so if we start breaking 132, then who knows, we could just continue down to 128. But I think we have some divergences down here, and like I said, I think in a bearish consolidation I want to see an uptick to get short, and then I'd like to see if I can trade that down. Okay, so short term, I mean I think we could be in for a couple of weeks reprieve if depends on non-farm payroll. Yeah, that's a horrendous move down. There's 2,000 points down in 2 weeks. Most of it was just on the Brexit vote alone. So I think we're due some kind of pullback, and then I'm looking for the next leg down. So I'll keep you posted on that. Monday I'm going to stay. It's Independence holiday for the US. There is some data at 9:30. I'm just going to sort of have a quick look at the markets Monday and then see where we are in the European close, or the London close, 4 PM Monday, and then keep my powder dry probably, unless there's something really good. And then just take it easy. You know, it's midsummer, volumes are low, and we've got non-farm payroll. Let's look at the euro. Euro to me is a bear flag, so same story. We need a higher test. There is some divergences down there. In fact, there's quite a large divergence down there. If you look at that MACD, that MACD is higher with the lower close. So we are due some more uptick, and so I'm looking to short somewhere around anything between 112 and 113, and then potentially as we come out of the summer into the autumn I'm looking for parity. Look at the wave count. We've got this huge wave down here from May 14 to a reversal here in April 15. So that's one. Let me get the pen out. 1, 2, 3, 4, and I think wave 5 is underway and crashing into this area here. Could see that make its way down to parity. It is a higher close on the weekly chart there, so you know it's not straight line stuff, is it? So just looking for that to push higher, and that's the kind of level I'm looking at. Otherwise, let's look at the FTSE. FTSE is enjoying a little excursion to the upside. It's a massive bar. Why? Because Bank of England are talking about quantitative easing, and the markets like the weaker pound, because a lot of exporters can improve profits as they become more competitive with a weak currency. Central banks love their currencies to be weak, so this is a gift. In some respects, Brexit is a gift to the FTSE, to the markets, but I'm looking to get short on a test of the underside of this trend line. So we broke down here in August last year, retested in October, dropped right back into February, pushed higher, dropped back to this fib level 57.25. Now we're up here at 65.90. I want this to push into this level here. I would happily short at somewhere at 66.50, possibly higher, to see if we can see if I can get a three-wave reversal. So already we're struggling with that. Potentially got a three-wave reversal already in the 3-hour chart. We've got a sell signal on back end of Friday. Let's just see where we open on the markets and see how we handle Monday. We're sitting above the trend line on the daily. So already the indicators are pretty high, and that's divergent as well. So far, that's divergent. Let's see if we crack higher or if the market's had enough and they're going to pull the plug. So an ideal place would be on this chart, 67.50, 67.60 would be a great place to get short. But this is a daily chart, by the way. If we start closing underneath 6,500, then that could be, well, that's going to be a sell signal. A new high, close low next day. To close under 64.90, and that's a sell signal on the FTSE. If we hold, then just look for higher levels. I'll be looking for higher levels to short around about the 67.50 mark. Okay. That's it. Let's just have a quick look at gold and oil. Just not seeing anything else in these markets I like at the moment. I'm just pondering it with the strength in the dollar, just looking to see if this dollar can come down to something like 128. In fact, I'm going to take this little trend line off and just sit and wait to see if 128 can hold, for that to push up higher. But we've got a lot of congestion above, as you can see. FOMC minutes on Wednesday, so it's a really busy week with the market still digesting the potential for Brexit and what that means to the market. Alright, let's promise you I'll look at gold or not. I'm looking at the Aussie dollar. So here's gold. I think this very bullish market, looking for this to hold around about the $1,300 mark. So test the 1300 will be great to see if we can come and test 1380 plus. If you look at the weekly, we are right up against the top of the channel. There's the channel from the high of September 2011. to the test of 1st of October 2012, and we are right up against that now. We closed there on Friday, so there is a potential for this to roll over. Yeah, potential divergence here. Stochastics are coming in lower after that has pushed higher, but you've got crossovers of most of the major moving averages in the weekly chart up here, but we are already very high. So just look to see if somewhere around 1300, 1325 holds, and then look to see if that can pick up for the next leg up. Yeah, that's 1302. So get another retest of that support, that could send gold higher. Alright, so that's the sort of levels I'm looking for. They're not hard and fast levels, they're markers. I'm going to see how the market opens up on Monday while the US is away on holiday on Independence Day, and then give you a catch up on Monday night. Alright, enjoy what's left of your weekend. Your feedback will be very, very welcome. Have a good time. Bye for now.